Recording in progress.
Good evening, everyone. Since the time is still early, so we will wait for another 2 to 3 minutes for everyone to get in, and we will start on today's lessons. Do wait for a while, yeah? Take your time, go to the toilet, grab some food, drinks, so you can listen to the story and the lessons while you just take it easy. Most important thing is get comfortable and enjoy for today's lesson. Let me adjust my camera a bit. It seems like it's not detecting just now. Maybe the line is broken. Seems good. Okay. Okay, so now it's 9 o'clock, then we will start on today's lesson. And thank you all for joining once again. And then for those who are coming in, just newly join our channel, our lessons, I will just give a little bit introduction of my own. I'm Hu Jun Lo, and you can call me Jay. And I'm now a senior financial analyst in uSMART, this company. So this is one of the very great company in stock offering. So if you are interested, you can join too. And in today's lesson, we have talked about many things about the very professional lessons on the theoretical knowledge. So for now, you might want to start. I'm actually already started a series of psychological class, so you can just check back on the last Wednesday lessons. I talk about be done, be rich. So that is actually the first episode of our series, and that one we talk about how to be simple in trading and investing. Because for me, I truly believe that that trading and investing is actually very simple, but it's not easy. So how do we make it simple and make money from it will be the core principle that we want to study on. And from all the years, I have learned so many things, so many knowledge and so many skills. And I found that even though I learned so many things, it doesn't guarantee my success. And once I figure out what is the most effective tools that's helping me in my journey, I only utilize those. So I eliminate all the unnecessary things and all the unnecessary knowledge, and I didn't try to just put all those SM smart money concept, ICT, and all those into use, because those are like guessing what is the opposite party tools in the market, what are the market doing in certain price. So I stopped trying to guess what are they trying to do, and I just make my trade simple. And that is the time where I start to really making money in the market. So for me, being simple is the most fundamental key to success in the financial world. And today, this will be the second lesson which is the mind trading code. And this is also when people ask me what is the most important thing in trading. Even though they expect me to talk about some fancy technical stuff or some very complex fundamental stuff, but here's a little secret. After all the knowledge that I have learned all over the years, I think the secret to a successful trade is actually all in your mind, as simple as that. So today we are trying to decode the mind and then to make a very successful trading journey. And eventually it will lead to unlock your inner financial genius. And let me give a little bit introduction of today's journey, which will bring you through all the agenda first. First of all, we will understand the trading psychology, and then we will go into the brand and the trading, and then we will go into the behavior financials. At last, I will share a little bit tips in how do I practice my psychology, my mental. And I think for today's lesson, it will take about 40 minutes, I guess. Yeah, I'm not really feeling well, so we will just keep the lesson very effectively, and then hopefully we can just stay focused all the time. Okay, so let's start on today's lesson. The first lesson is understanding the trading psychology, and I want to make this lesson more easy and more relaxing, so I will just start with a story first. And this is a real life example of my own, and then I will just start with this story. So this is the tale of two traders. The summation is just the same information, but it leads to different outcomes. And this is a story that happened just 2 years ago. I had two students. I won't call them students, two friends, and let's call them Mike and Sarah. The name is fake because I don't want to share my friend's real name. And both of them are very incredible, smart people. And then they have a very similar background and similar knowledge levels. And both have the same principle to invest and trading at the initial stage. And both of them get to approach me to have a little bit of personal coaching. And I did share about the mind strategy to be used, and then I did share about a little bit insight of myself, a little bit small tips on the industry and the market, so that I get the same education, they get the same strategy, they use the same strategy, and then they also get the same information. With all the things are just very similar provided, and then eventually they lead to different outcomes. This is also why I see that psychology is very, very important to this trading and investing journey. So this is where the story gets interesting. Sarah and Mike. Okay, Sarah, we just stick to the trading plan, manage her emotions, and then she make a very nice 15% gain. And eventually, he's very confident in all the executions and trading. And Mike just did what most of us have done at some point, which just like me at the initial stage, I let the emotions just take over control. So Mike also let the emotion take the wheel. So he just keep on have a second guessing, like even though he make a decision on where to enter and where to exit, but he keep on have a second guessing on what if the price go there, what if happen, what if this happen. He didn't have a very self-confidence in the initial decision that they have made. He didn't confident in his strategy, and then he just keep on have a second guessing, and then he just keep on jump in and out in the trade very frequently, several times. So he end up losing a 20% in his investment. So even though they have learned the same strategy, they have learned the same, they have just been told the same tips and the same insight, but they lead to a different outcome. One, they just make a very simple execution and they are very confident in their trading journey. And the second, he just keep on have a second guessing on and doubting his initial decisions, and then he just very stressful throughout all the journey, and then at the end he make a loss of 20%. So with the what do we learn from this story? With the same information, same opportunity, but completely different outcome. The only difference is it was all in their head, as simple as that. And this is also what we call the 80-20 rules of trading. And your bigger edges in trading is your mind. Now I bet you all just go through the same situations like Mike, or you are currently being in the same situation or a similar situation. It's because trading is not just about charts and numbers. So even though you are very professional chart analysis professional, or you are very professional in reading all the financial reports, it doesn't mean that you will be success in your trading and investing journey. So it was all about what is going in here and also what is going in here, the heart and your mind. So you need to understand what is going on in both of these places, and then you know what is wow, because I do did a research on the success to contribute to the trading success, and then this is what I found. Research showed that about 80% of the trading success actually come down to psychology. That is very huge, 80%. So think about it. Even though you have a best trading strategy in the world, so they only contribute 20% to your trading journey. But what if your mind is not in the right place? Then what will be your situation? You'll be like, you are having a Ferrari but with a broken engine. So can that Ferrari run well in the highway? I don't think so. So you need to, even though you don't have the best strategy in the world, a simple strategy might lead you to a success in the journey too, because the majority of the success contributed by psychology. And we already talked about this rule. This is also called the Pareto rules, and we already talked about it. Like 20% of the time that you spend in the chart will contribute to 80% of the time, 80% of your profit. So the remaining time doesn't really important. Just the execution part and the journaling will contribute to your success in the future. And then also we talk about it, like sometimes 20% of your trades are able to contribute to 80% of your total profit. So this rule actually apply everywhere among our trading journey. So we have already been through it in the last lesson, and then we're just moving forward. And then the next thing that we will talk about is the chapter 2, the brain and trading, the science behind our actions. I do did a research on the brain and emotions that will contribute to, because when I'm a loser in the market, I want to figure out what make me lose in the market. I want to figure out what is actually happening in my brain. I'm a very technical and practical person, so that I want to find out the real roots and reasons that make me become a loser in the market. So I did a little bit research on brain components and also the psychology part, so that I can be more aware of what I'm doing, more aware of what is happening in my mind, so that I can just have a better control. Now I'll just share the little bit study that I have made previously. And then let's just look at this. Will be what actually happening in our brain when we trade. And don't worry, I won't make it very complicated. I will keep it very simple, fun and relatable. So you got three main parts of your brain working when you are trading. So I would like to call them your inner traders. So there will be the panic trader, which is your reptilian brain. Do you ever feel that your heart races when the market suddenly drops? That is this guy in action, the red part. And then there's your emotional trader, which is the emotional brain. And this is the part that maybe you will feel good about certain actions and decisions. Sometimes it's right, but sometimes not so much. And then finally we will have a rational trader. And then this part is actually look at the chart and make a very sensible decision. And the trick is getting this one to speak louder than the others, because this one, the red color component, is actually the one that is more important and contribute the most to your trading success. You want to be rational instead of letting the emotion get rid of you. Okay? While this is not entirely scientifically precise, this framework is often used to explain how different aspects of our component react during our decision making. So here is the explanation of these three brains in the context of trading. We'll go through one by one. Let's go through the first one, the reptilian brain. And I call that a panic trader, because actually the reptilian brain in charge of the survival instinct. So what does it represent, the reptilian brain? It's actually referring to the most primitive part of the brain, and it will be responsible for the very instinctive behavior like fight, and then panic and freeze. So wherever that you feel that you are very scared and you are panic, this is the guy that is making you feeling that way. So what does it play in the role of trading? It will make you have a panic selling, a FOMO buying, because you are fear to just miss out of the trade, and then you will let you freeze in uncertainty. So you can see that all of those are very uncomfortable feeling, and then it will just make you feel fear and then feel panic, and then it will just drive you to certain behavior. And this is actually the part that is responsible for your fear and greed driven behavior, which could lead you to over trading or abandon plan. Like you already make your plan where to enter, where to exit, but when the stock suddenly tries to drop like a falling knife, you become panic, and then you sell, and not according to your plan, even though you didn't plan that way, but you make a sell. So this is the guys that are making you feel panic and fear. Next will be the emotional brain. And then this is actually linked to the limbic system, which will process you, the emotions, memory, and social use. And then this is the foremost important feeling that it generates, which is the fear, the greed, the hope, and the excitement. And it could cause, it will make you in trading and investing, it will make you to just make some very emotional bias, like holding on to a losing stock, and then hope that you will get bounced back, or after you have a certain winning strike, and you will just become overconfident on yourself, and then you will just take on a very excessive risk in the next trade. So this is the guy that is making you do such thing. So the next one will be the rational brain. So what does it represent? The rational brain is actually associated with the logical reasoning, planning, and critical thinking. So the first one is analysis. This is the flow of the rational thinking way. The first one is analysis, and then you will go with the planning, and then you will go with execution, and last it will be review. And then in the role of this rational brain, you can see the flow go like this way. So it actually enable you have a data-driven analysis, and then it can just enhance your trading plan. So actually you can just use this rational brain balance the emotional impulse by multiplying the disciplines and a very structured approach. So after we go, this is all about this brand, and then you can see that actually the rational brand contributes the most to your trading success. It is the one that makes you to make a very rational decision, while the other two just keep on making you to do very excessive actions like over trading and then holding it without any confirmations, and then just getting it aggressively without a very proper analysis. Those are the two of the brands that are messing up you. So actually you want to just manage the other two while you need to keep your rational brain in function. Stay calm, and then you can just manage your objective during the market. So this is the key to just control your brain to develop, and then you can just develop a very good strategy to just leverage the rational brain while minimizing the influence of the fear, the greed, and also the intuitive reactions. Now we are already done about the biological part, which is the brain structures, and then we'll move into a little bit of self-assessment time. Did you ever think about your last trade? Maybe it was just yesterday or the last month, and try to just think about it. When you are having the trade, when you're executing the trade, what is the emotions that actually feeling at that time? Are you feeling rational, or are you feeling fear, unable to get sleep, and you need to just come to check on the chart, just every few seconds away? And where did you feel then? Where do you feel that in your body? Is that your brain, or is that your heart? Are your heart racing fast, or is your brain just keep on thinking them and then didn't get you to have a rest very well? And did you have a stomach ache, and then what triggered them? What is the most are your emotions getting just grabbed by the chart pattern? If you move up, then you'll be happy. If it comes down, then it make you feel sad. Are your emotions just right along with the chart pattern? Well, you don't need to share. It's just for you. It's a little bit of self-assessment, but you need to recognize how all these feelings, because recognition is the first step, and then you will come to have another step, which is to mastering them. Now we will talk about the science of trading. I will tell you something very fascinating, because it is a dopamine effect. When you are trading, your brain is actually releasing the dopamine, and then dopamine is actually a very powerful chemical in the brain, and it will be responsible for motivations, reward-seeking behaviors, and habit information. This is why you feel a rush when the trade goes well, and this is why you catching the feelings like liquid could lead to a very reckless behavior. So, for example, this is also why wins will feel very good, because every time you win a trade, your brain gets to release a dopamine. You get to have a dopamine spike, and then it will make you to just reinforce the behavior. You will feel very high at the time. You will feel high and great, and then you will just want to replicate this feeling. But this is the problem. Dopamine doesn't distinguish between your skill and your luck. So you might just attribute your success to your analysis, even though it's just a very random market movement, market fluctuation. So you will just think that you're very good at it. So what else release dopamine? Chocolate. So your brain is actually just trade the winning trade the same way like it trade the dessert. So when you have the chocolate, you will feel like want to have another one. So because because the chocolate is tasting good, it make you feel good. So this is the same that dopamine make you to do another trade. So when your trade is just going well, you're making a profit, the dopamine will just make you to do another trade once again. And do you ever heard that some inner voice in your head just tell you to do another one more trade? That is the brain wanting another hit of that very sweet dopamine. And then this is also why losses hurt more, because if you when it's just the opposite effect, and then the constant chase of the dopamine type will just push you to over trading and losing. And then when you are expecting there's a dopamine spike and you didn't get it, you didn't have it, so you have a disappointment in those, and that will also make you to feel like hurting more when you are losing. And then this is the chemical basis of your trading addiction, because just like the dessert, some people will get addicted to dessert, and some people will get addicted to another thing, and then this is all because they are seeking for just dopamine. And trading is one of the actions that can make your brain release dopamine. So when the dopamine flow your system, you just lower down your irrational mind. You just lower down your perceptions of risk. So you will feel invincible after some winning strike, and then it will lead you to the oversizing position, and then you need you to skip your stop losses, and then eventually you will lose more and hurt more in the market. So the key is to just disconnect your emotions from the outcome, because dopamine doesn't tell if this success belongs to your skill or your luck. So you need to distinguish between, you are the one who need to do the task to distinguish all those, and you are the one who need to just do the analysis after the trade. So you need to treat the trading like a job. You just need to focus on the process, but not the reward. You need to know what is in the process that contributes to your win, but not just because it wins, so it is good. Sometimes a losing trade might not be a good trade. It might be a good trade, even though you have a very good setup, it might be lose sometimes. So you need to know that the process is more important, because you need to make a long run in the market. So you need to know what contributes to a very high win rate. You won't make 100% win rate, so you just need to be rational about it, and then get rid of the dopamine. Now the third section, the behavior finance. We'll talk about how psychological influences and biases affect your behavior. And then let's talk about something that we all deal with, the common trading biases. And you know the feeling that you are so sure about the trades, and you ignore all the red flags. This is what we call the confirmation bias, which is the first one that we're going to talk about. But you're feeling so confirmed on the specific trade, but without any specific reason, and then you just keep on ignore all the red flags, all the warning signs, all the risk in behind, and it just feel like you have a very stubborn friend in your head, but he only agree with you. No matter what you say, he only agree with you. So yeah, I also seen a lot of traders that just hold on to a losing position because they are very conformed on their biases, and then they just keep on looking for a sign that their trade might turn around, might bounce back, and then recover back, and not even recover back. Instead, they just want to make more money. For instance, like give you an example, like when a bad earning reports come out, then they will just keep on looking for, even though it's a bad earning report in general, but they'll just keep on looking for very small positive comments in the CEO speech. So this is very stubborn, right? Because they just keep on insisting on their perspective. And this is also somehow related to another common biases, which is called the loss aversion, which I have been there too, the loss aversion. Even though you can say that previously those people holding into losing position because they want to avoid for the real losses. They call that a paper losses, but not a real losses because they didn't sell it. So this is also called the loss aversion. Or there's also another loss aversion which I do practice it before. You can find on those traders who always set a break even when their trade just reach some certain profit level. And this is also one of the loss aversion actions, because I didn't mean that break even are bad mode. Actually, break even is great, but it depends. A very tight and micromanagement on the trade and investment will definitely hurt our P&L. So I want to have a very tight and micromanagement my own tradings, and then it eventually just make me have tons of break-even trades, and then eventually it make my performance even bad when it comparing to previous. And then the third common trading biases is overconfidence. Okay, what is overconfidence? Easy. You're very confident and you overestimate yourself. You overestimate your abilities, especially after a winning strike. So after you win a lot, and then you just think that, wow, I'm like a god. I'm like a god in the market. You know, I can predict the next move. And once I take a look at the chart, I can know that it's definitely going up. That is what we call overconfidence. So in trading, after you can see very often other traders have a winning strike, and they believe that they just crack the code in the market, that they master the secret recipe in the market. So they start to just increase the position size, just take more risks, and then they just stop doing all those analysis. You know, they believe on their intuitive instead of analysis. So my take to just get rid of the overconfidence is stay humble. Always stay humble. The market has a way of humbling those who get cocky. So if you get cocky, then you are going to catch the knife. The knife will fly through you. The last one is anchoring. What it is actually it's actually relying too heavily on the first piece of information you see, like entry price or initial analysis. Let's say that I buy a stock at $100. Even if all signs just point to a downturn, I might refuse to sell below 100, because 100, this number is anchored in my mind as a fair value. So I believe that this is what this stock actually worth, and this is what we call anchoring. So, and now we set a very clear unemotional exit point. Just no matter which number, the number doesn't matter, and the fair value also doesn't matter. You know, it just all depends on the market action. And then the market is actually a mirror that reflecting to our psychology. This is why all these indicators are born. You know, the fear and greed impact, it can just determine by how many people are just rushing into the market, and then they're just determined by the buying force versus the selling force, and then they will have a fear and greed impact. And then they also have the market sentiment indicator, especially on forex and some commodities. You can just check the market sentiment indicator everywhere, and then it also lead to a crowd behavior. And I'll say that why the market just just like a giant mirror reflecting everyone else. You can just check on current market. A lot of stocks just going up and up without the sky limit, and then it is way high above than the fair value, way high above than the price that it should be falling on. So this is actually people are doing it in an emotional driven way. They just keep on chasing the stock and they believe that it will have a very high price, and instead of just studying on how this business is doing. Remember the GameStop saga, the GameStop event. It wasn't about a fundamental. It was just a very pure psychology in action. It was like watching a global game of psychological chicken. So you can just see it all around. Now we'll move into the final sections of today, the small tips to practice to gain back yourself. This is one of the skills that I use very often to just try to just make myself more reasonable in what I'm doing. This is also what we call the stop technique, which starts from the smallest first letter. S is stop. Stop what we are doing. When we having some losses, we can just stop on just keep on trading and investing. You need to stop to analyze, stop to just look at the chart, stop to just look at the number, stop at just checking your account balance. Stop everything. Away from all those emotional driven things, okay? And then take a breath. Yes, actually breathing. So you can just take a breath in and out deeply and then relax a bit. And then you need to observe what are you currently thinking and you feeling, and then you proceed mindfully. Very simple. This stop technique is actually very simple. Whenever I have a losing strike, I will stop on what I'm doing. I will stop a trade for a few days or maybe for a few weeks, because I want to just don't let the emotional take control of me. So I stop checking on the chart, I stop checking on the account balance, and then I take a breath. I do some actions that can just make me feel relaxed a bit, and then I will just take a look back at what I've done previously. I observe myself. I observe my historical trade, and then after that I will just proceed mindfully in a very calm and steady manner. I know it might sound simple, but trust me, it's hard to practice. It saves me from making some very expensive mistakes. I also call it your personal cycle breaker. It can break you from keep on falling into the losing spiral. And then this will be how to build your foundation, your psychological foundation, before you proceed into before you become a trading and investing expert. I would say expert. So the first one is self-awareness. Self-awareness always comes first, because you need to understand your emotions, your behavior, your strengths and your weaknesses as a trader and investor. You need to understand yourself first before you proceed to anything. So this is also the cornerstone of the framework. Without the self-awareness, it's impossible to manage your emotions and recognize the biases effectively. So you need to, how do we do that in trading? Actually, it's just to track your emotional response during your trade. Like, how do you feel when you're winning? How do you feel when you're losing? And you can just identify your recurring patterns, like a revenging trading after a lose or overconfidence. So you can just ask your question to yourself, like, what motivates my trading decisions? Am I driven by fear, greed, or logic? So why do I put self-awareness as a first step to just build the foundation, the cornerstone to the foundation, because self-awareness is the foundation because it lets you identify the area that need improvement. It sets the stage for emotional regulations and more rational decision making. Recognition is the first step. You need to identify first before you make any changes. And then the second will be emotion control. Managing the emotion response to ensure that they don't interfere with your trading decisions. Why is it the second? Because you cannot control the emotion effectively without first identifying them. So once you understand your emotional trigger, you can just develop your strategy to manage them. So the first awareness just to identify them, and then you have the emotional control to control them. So how do you just practice the emotional control in your trading? So first of all, the identification, you just record down what you're feeling, right? So now you can just use some technique like deep breathing, meditation, or step away break. This is all the technique for emotional control. And you can also set some rules for your trading, like the stop loss and your P&L, to just reduce the emotional get interrupted your trading decision. The third one is the bias recognition. The bias recognition is actually to identify and addressing the cognitive distortions or the biases that impact your trading decisions. And you can say that once the emotions are managed, you can objectively evaluate how these bias will influence your behavior and your decisions. So in the practice, you can just check on, are you only seeking for information that support your trade? Are you have a confirmation bias, the anchoring and overconfidence? All those you need to just check on, do you have those during your trading? The last one is the strategy thinking. Once you get everything set up very properly, you can just have a strategic thinking. You can apply a logical, a rule-based decision-making process to execute all those trades effectively. So the purpose of this strategy thinking is actually to use your self-awareness, your emotional control, and the bias-free perspective. You utilize all those three to create a clear trading plan to follow. So once you identify, you have a control, you also recognize the biases, and then you get rid of the biases, and then you can make use of those to create your strategy and follow. And now this strategy is what we call the strategy that has the least emotional interfere. This is also the most rational decision that you will be able to make. So a strategy thinking actually requires a very clear, unbiased, emotional balanced mindset. That is why this is the last step in your building your foundation. You need to have the first three steps to prepare yourself, and then you can execute the trade effectively without getting interfered. So by following all these progressions, you can actually move from being emotional, reactive to being disciplined, strategic, and resilient in your decisions making process. So this is all about the second class of the psychological trading. So you can contact me anytime, and this is my contact in VCOM. And you can we will have another lessons on next week. On Wednesday it will be a bearish strategy, which we talk about the vertical spread, and then on Friday there will be another psychological class. And among all those psychological class series, I will just share about my own personal knowledge and story, and then you can just develop a very good mindset in trading and investing. And for the Wednesday sessions, it's more like a very technical lessons that will teach you to utilize options and the other financial instruments, and then you can especially we do post the strategy to be used every day in the group. And then if you want to figure out how to just make the execution based on the advice they given, you can join on the class on Wednesday, because we do teach about the basic theories, the underlying knowledge, and also how do we execute it. How you need to understand how this strategy works first, and then we also teach about how the executions and the applications, you know. So if you are very interested on the on options trading strategy, and then you can join on Wednesday classes. But if you are want to just hear about some storytelling, some journey to become a successful trading, then you can join on the Friday class. And at the end, I'll just show you a little bit of the benefit of open an account in uSMART right now. If you open an account in uSMART right now, you are able to get a 0.02 Tesla spread, and the more that you deposit, you are able to get more cash voucher. And then here is the registration QR for your benefit. And then you can actually, the above QR is for the Singapore apps, and also the global apps that we call, and then the below QR is the Hong Kong apps. And this is all for our sessions today. Thank you all for joining. And then at the end, I will just share about the disclaimer to avoid any unnecessary mistake and error. Thank you all for joining. Hope to see you guys again on next classes.